Hi, I'm Dana Papke, TPO's president. TPOBrainTrust events pull together business leaders and experts from various disciplines to discuss contemporary leadership topics. The following are excerpts from our summer 2012 BrainTrust event. We invited Chris Bergen, president and publisher of Tax Analysts, Michael Pearson, the executive director, Mathematical Association of America, and Bob London, CEO, London Inc., to join Karen Usher, Sue Clater, John Raster, and me to discuss the impact of human capital on business results. Our conversation included how to measure human capital in a rigorous and quantifiable way, understanding the proposed ANSI-SHRM metrics and whether they are sufficient, and whether or not culture and innovation can be measured and quantified. For full transcripts of each participant's interview, please click on the links below.
I know the employees are our biggest assets. In our kind of business, they have to be. We know we're the gold standard in our niche. I know I have the best staff. How do we evaluate that? How do we put a quantitative value to it? And how do we set up matrices to keep that, to maintain it, and to make sure we don't lose it? So how do we value that? How do we protect it? How do we grow it? Those are all really important issues for my organization. This is hard stuff, trying to protect yourself from making mistakes when it comes with employees, trying to figure out how to value employees. This is very hard. I actually thought before I came here it was easier than I think it is now. HR is vital to the organization and to coming up with these metrics and measuring how you're taking care of staff and how you're improving staff. Training, compensation, benefits, all of it. I think CEOs who don't value the HR operation are making a tremendous mistake. Where we're lucky as an organization is the management team to a person gets the people as an asset. What I would plan to do, not tomorrow, because my CFO is not in, I plan to take my HR director, this is a direct result of today, and my CFO, who is the matrix guy, he's the numbers guy, and take him to lunch and ask him what they think about what we've talked about today. How we value that asset, not just by salaries and benefits and those kinds of things, which the CFO will do, it's his job, and how she looks at it and see if we can develop different ways of valuing the asset.
Certainly an interesting discussion, and it's an interesting theme to try to understand how our employees, how staff, our colleagues, how collectively they represent a huge part of the resources that the organization brings to bear on our mission. I think all of us have the gut feeling that that's the case, but quantifying that is a little bit tricky. At the same time, it's useful to both think through a set of issues related to human capital, both in terms of what it costs you to support that capital, what you should spend to maintain that capital, if you will, what are the maintenance costs, the professional development cost, and what is the return on that investment in a very business-like point of view, but also just in terms of how does the overall health and one of the words that came up again and again, the engagement of your colleagues, how does that contribute to the value of the organization? The engagement question is one that I personally feel is of particular interest and value to an organization, or at least to our organization, making sure that staff at all levels understand the mission of the organization and how their work fits into that, and I hope have some sense of excitement about their ability to contribute to that work. That engagement piece is the one where I would want to start. The value of having a well thought through onboarding process as contributing to employee engagement, especially getting them up to speed and engaged faster. That's one of the things we're going to think through almost immediately, is go back and look at that process and see how we can use that as a tool to really bring people in the door and get them started right, because it really does make sense that if you get somebody off to the right start, you're way ahead of the game in terms of correcting things that are a result of them not getting off to the right start down the road.
hopefully we are getting closer to the concept of connecting HR to business metrics and results. And maybe, as we discussed today, it has to do with starting with the business metrics and working backwards and saying, well, if we're going to say that staff is the biggest line item, then we ought to say that staff has the biggest impact on the business results, and we can show that. But I think it really applies to things like human resources and human capital and strategy and vision and people-related issues, that you can't metric your way out of a situation. You have to take a step back and get perspective and see what you're facing. So much of it is a feel for things on top of some core things that you can actually measure. The metrics are not a solution to anything. It's a way to just understand where you are at a given point in time and see where things change. So you have to have, there's no question you have to have them.
Well, I think it's very clear, if you pick any of those topics, innovation, culture, engagement, that if the business opportunity or the business problem clearly points to one of those or a combination of those being a source of opportunity or a source of problem, then establishing a measurement protocol for them and measuring them over time is critical. The question is, the current definitions we have for these don't provide us a way to look at them quickly. They only provide us a way to look at them over time. We're going to need to find a more pithy way to look at the topics, particularly in regards to problems that have their source either employee engagement or employee innovation or culture. We're going to have to move faster, find a way to move faster. And that means we're going to have to find a way to diagnose faster and find a way to understand faster. If there are 4 things that you need to assess when you make decisions, then stick with those 4 things. I just learned today there may be a 5th. A real concrete 5th. And in that sense, the ANSI-SHRM proposed protocol, although it's not the right questions, the idea of a proposed protocol is an interesting one. With each business we work with each company we deal with, as they deal with their human capital issues over time, what are the right questions for them to repeatedly ask themselves as they go through their decision trees, as they go through their implementation processes? What are their individual right questions to ask in regards to their business as it pertains to the impact of human capital on their business processes? Yeah, I'm going to create my list for my company. Over the next few months, I'm going to think through and say, what human capital elements are critical to our success, and therefore what questions should I ask about those on a regular basis? It's almost like using a strategy sieve. It's very much similar to using a strategy sieve when you're working on something and you say, okay, we've determined what we want to do strategically. Now, what are the 6 questions we have to ask of every change we're about to make sure we stay on the right strategic path? And I don't think it's very different from that. It's just the people element of that.
How do you measure a culture? Is that measurable, or is that just information that you gather? I don't think all measurement has to be a number. Most important, you have to decide why you want to do it and what you're going to use it for when you're finished. I think it probably needs to be customized to fit the organization. You can check people's references, and you can get as many references as you want, and you could even test somebody. Places that have validated testing on somebody's ability to do X, even if all those, which are measurements, are there, if they're great, if you don't feel that you can work with that person, then I don't think you should hire them. That's the one to me that's not measurable. When you talk to a lot of so-called HR professionals, and they want to say that you shouldn't pay attention to that, and I just think that's wrong. I think you will ultimately end up with unsuccessful hires that won't work well for the company, won't work for the person. I think that just creates more cost.
We're talking about something that's actually fundamentally different, putting people more at the forefront of how the strategy gets implemented, where the strategy is anchored, how I use my human infrastructure, my people system to move the business forward. The best managers that I know have some other non-GAAP numbers, maybe financial, maybe operational, maybe some combination, maybe invented, that give them insight and foresight into how their business is going. Comparing this to a more typical financially based scenario, different businesses, different industries focus on different financial aspects. Some companies, some industries are focused more on profit margins. Some are focused more on return on assets or return on equity or growth rate or various things. So while they may all have the same financial statements, they may focus on different areas of the income statement or the balance sheet. Likewise, different kinds of companies may look at a spectrum of human capital kind of indicators and for different reasons, different industry, different focus, different strategy, different whatever, focus on certain parts that another organization may focus on different things. Another thing that struck me was how trying to think up some measurements that may span time and scale. I mean, the difficulty in sort of bringing that back to something concise that could be maybe quantified or maybe not quantified, but somehow addressed rigorously. So a lot of territory needs to be covered, and frankly, I think most of it needs to be invented at this point.
There's just quite a bit of distance to go in terms of figuring out what will really help me predict what I do with my human capital versus what happened to them previously. The real measurement of human capital is ultimately in an organization going to come from the business leaders if they figure out that they need to make a connection between their business outcomes and how the individuals or departments perform. You have to start with how the business or the function is measured and then start working backwards. So if this is the business outcome, what are the key predictors on a business level, again, of whether we're going to reach this outcome or not? And then drill back to what's the performance on an individual or a group level that will cause us to be able to hit those milestones. But it's a long process, and organizations, I think, are challenged by taking the time to work back from what's the business outcome, what are the predictors on the business level, what do we need to do on the individual level. You know, I do think it's worthwhile starting because most organizations that we work with aren't collecting the information in the ANSI-SHRM list. And so if they started even collecting that information and having a discussion within their leadership group about that information, they will begin, I predict, to ask better and better questions. And when they ask better questions, they'll start to make connections to the business. When they start to make connections to the business, they will, within their own organization, start to develop metrics that are important to them. And those metrics for a long time may just be that they're talking about impact of this or that as it relates to people on the business. Once people realize that and the leaders are looking at those metrics, even if they're not the absolute right metrics for that organization, people will ask better questions, and they'll ask better questions of other people in the organization, and it starts to change the mindset.